Palantir Technologies is an incredibly fast-growing data analytics company with the backing of several prominent investors, including Cathie and Peter Thiel of the PayPal Mafia. And this company may be overdue for a spike in its stock price. Hey everyone, and welcome to FinTech. And in this video, I'm going to be going over the background of Palantir as a company, looking through their most recent earnings reports at how they've been performing, and finally looking for what opportunities they may have in the future. As always, stick around to the end of the video to see whether or not I personally decide to invest in this company. So hit the like button, subscribe if you want, and let's just jump into it. Palantir was founded in 2003 by 5 co-founders, perhaps most notably including Peter Thiel. Thiel got his start at PayPal, where he, along with several other high-profile entrepreneurs, revolutionized the financial payment space. He grew his fortune by later becoming the first outside investor in Facebook, and he has been active in investment funds ever since. Thiel still serves as the chairman of Palantir. They IPOed relatively recently in September of 2020 with an initial valuation of $18 billion. That first day of trading though, their valuation dropped all the way down to $15 billion before rising until it eventually peaked at $64 billion in January of 2021. As of when I am currently filming this video, the price is off its all-time high at $21.73 a share, giving the company a valuation of $39.6 billion. The idea behind starting a big data analytics company like Palantir originally came to Thiel by applying the same fraud detection practices they developed at PayPal to other use cases like fighting terrorism. In fact, the CIA was Palantir's first investment backer. Due to the sensitive nature of many of Palantir's clients, which include a lot of national security organizations, much of Palantir's early history is shrouded in mystery. But we do know that even early on, they had broader ambitions than just serving the military and the intelligence industries. In fact, in 2009, the Securities Investment Protection Corporation used Palantir's technology to convict Bernie Madoff in the largest pyramid scheme of all time. Today, Palantir still has a large customer base in the government and the intelligence agencies, but they've also expanded to other industries, including finance and healthcare. They are highly adept at handling large amounts of very sensitive data and then using that data to unlock business insights for their customers. They have 3 software-as-a-service platforms currently: Palantir Metropolis, Gotham, and Foundry. Metropolis is no longer being actively developed or marketed, but it is still used by some financial services companies. But let's focus more on the last 2, Gotham and Foundry. Palantir Gotham is a software-as-a-service platform that lets you integrate, manage, secure, and analyze enterprise data. Now, I just took that directly from Palantir's website because, to be honest, I don't fully understand their products. So here is my understanding of Gotham and why it is useful, but this is me saying this as a layperson and not someone who has deep experience in this type of technology. Gotham allows companies to set up data pipelines from several different sources. This could be customer transactions, website visits, maybe shipping invoices. It takes all of this different data and brings it together into a single data set which can be used by a specific domain of the business. So the data that your financial services team would be gathered together in a format that is useful to them, while the data for your engineering team might be gathered into a different domain that is useful to them. In the past, Palantir has managed to set up these different data sets using a combination of automated software as well as sending in actual teams of engineers to structure a company's data in a way that's useful to them. Gotham has been used by over a decade from customers ranging from the United States Intelligence Service to the Department of Defense to telecommunications companies. One of the big drawbacks to this platform in the past has been the fact that it requires so many engineering hours on Palantir's part just to get it up and running on a new customer's system. Basically, Palantir has had to act like a consultancy just to get these products installed. We'll talk a little bit later about some of the steps that Palantir is taking to make this software a little bit more scalable and require less man hours from them. So the other product that we need to talk about is Palantir Foundry. Again, this is from my admittedly a little bit limited understanding, but Foundry is used to generate business value from a data set. If you've been watching this channel since when I used to invest in Alteryx, it's kind of like Alteryx Designer. This is a tool that's targeted at non-data scientists in order for them to run advanced analytics that can generate insights about a company. This allows companies to essentially take work that would normally require a really expensive data analyst to crunch the data and push it off to someone who maybe has more domain expertise or is just cheaper to hire. It also provides deeper integration with the data, APIs that you can hit in order to pull the analytics, and reusable analyses that can be incorporated over time into a business's established business processes. So just at a very high level, it allows non-data scientists to do work that would normally require a data scientists. And this product is being used by several large enterprises, including Morgan Stanley, Airbus, and Fiat Chrysler. So in addition to these two software as a service platforms, Palantir also has a third product which I wanted to differentiate a little bit because it has a very different purpose. Their Apollo continuous delivery software. Apollo, to really simplify, is a tool that allows Palantir to push updates to their products. In the same way that Tesla has managed to differentiate itself from other car manufacturers by pushing over-the-air updates to their cars that make them better over time, Palantir is doing the same thing with their software. Now, while this might not seem like a big deal because after all, your phone receives updates all the time, it becomes a lot more complicated when you're dealing with on-premises systems or maybe systems that are installed in remote areas that aren't actually connected to the internet directly. On their website, Palantir talks about how Apollo can be used to perform continuous delivery to the cloud or to the back of a Humvee, something that may very well be required in certain military use cases. So while Apollo might not be as flashy as some of Palantir's core products, it is really a differentiator between them and other cloud providers who might not have the expertise to push data onto these classified, non-internet connected systems. So when you put all three of these products together, Gotham, Foundry, and Apollo, there really isn't another company that directly competes in all of these different areas. There are companies like Snowflake that provide data housing and analytics. There are also platforms like Alteryx that allow data to be ingested from multiple sources and then analyzed by a non-data scientist. And of course, there are plenty of government contractors that can go and handle sensitive or classified data. But if you put all of those requirements together, there's really only one company that fits the bill, and that's Palantir. But in order for Palantir to continue to grow, they're going to need to move into new areas besides just government contracting, something that they have been focusing on since they went public. So now let's look at Palantir's most recent earnings results to see how well they've been performing. And FYI, for this part of the video, I had to read Palantir's entire earnings call transcript, as well as watch this kind of weird video of the CEO taking a walk in the woods with, I guess, a full production team. So if you appreciate this kind of effort, please just hit the like button. It really helps boost this video with the YouTube algorithm. Palantir grew their revenue 40% in Q4 of 2020 to a total of $322 million for the quarter. This puts their total revenue growth for the year at 47%. So if they were to continue this pace going forward, they would double in size every 2 years. This puts their total 2020 revenue at $1.93 billion according to the CFO, though this number differed slightly from numbers I saw at other sources, which put their revenue at $1.1 billion. While some of this growth came from acquiring new customers, they also increased the amount that their average customer spends on the platform to $7.9 million, an increase of 41% year over year. This is a good sign that customers really like Palantir's software because once they're signed on, they're willing to spend more on it in the future. Their full year revenue from the government sector rose 77% this year, and their commercial segment in the US grew 100% in 2020, partly because they entered that segment much later than the government segment. Their top 20 customers still make up 61% of their total revenue, so they are a little bit concentrated, but that number is likely to go down in the future as they begin to make their software a little more automated and less reliant on consulting. They grew their total number of accounts with over $10 million in annual revenue by 50% this year, but they still have a lot of runway to grow. Their customers only include 12 out of the global 100 currently. The CEO also made this interesting speech while walking through the woods at the beginning of the conference call. During that speech, he repeatedly used the term lagging indicator to talk about their revenue.
Palantir's numbers are a lagging indicator. The numbers that you've seen, they are a lagging indicator.
Basically, he thinks Palantir's growth now is not representative of how they'll grow in the future once they start to exponentially increase the sale of their software as their customers manage to beat out any competitors that aren't using Palantir's software. Now, is this just marketing to investors or is this his genuine opinion? I'm not totally sure. But if we do take what he said at face value, we should expect revenue to not only continue to grow, but to accelerate in the future. Their non-GAAP income from operations was $104.1 million if you exclude expenses such as stock-based compensation. Their fourth quarter adjusted gross margin was 84%, up from 81% a year ago, showing that even though Palantir is scaling and gaining more customers, they're not increasing their expenses at the same rate as their revenue. Much of their earnings call was dedicated to calling out notable customer wins for the company, so I'll list out a few of those here. They landed several big new contracts in Q4, including PG&E, the US Army, the US Air Force, the FDA, and the NHS. In just the last 3 months, they signed on 21 deals worth over $5 million, including 12 deals worth over $10 million. They signed a renewal deal with BP that was worth 9 figures. That's over $100 million. They also forecast the revenue for next quarter to be an increase of 45% year over year, which would be an acceleration from what they saw this quarter, but still a little bit slower than they saw in Q3. So aside from their earnings, the other big focus of the conference call was their products. Palantir launched Foundry 21 this quarter, which is an improvement to their existing Foundry product. This newest version includes a drag and drop interface as well as new software-defined integrations. This is going to be key to Palantir's future. I mentioned earlier that implementing Palantir software onto different companies has been a very manual process. Getting data into the correct format is a really hard problem, and Palantir's best solution to this problem has been a mix of applying software as well as just sending in teams of engineers to build a somewhat bespoke version of their software so that it can handle that customer's specific data. And while this has worked effectively in the past, it's a much harder model to scale than traditional software as a service. Basically, the more customers you sign up, the more engineers you need. And engineering talent isn't cheap, nor is it in infinite supply. So in order for Palantir to really scale its products to the next level, they need to focus on making the deployment as automated as possible, especially for their Gotham software platform. The ultimate goal would be for a company to be able to go to Palantir's website, click a single button, and it would just install Gotham and Foundry on their systems, and they'd be able to use it right away. Now, while it will probably never be quite this simple, even with AI, I think this goal kind of acts as a North Star for what Palantir is going to try to achieve in the future. The COO noted on the call that while you might not be able to capture all of an enterprise's data right away, you can, with a few clicks, install end-to-end solutions right now that in the past would have cost millions of dollars and taken several months to get up and running. And we've seen the effects of this newfound automation already showing up in their numbers, with Palantir doing more aggressive marketing and reaching out to smaller companies. While Palantir has been focused mainly on government contracts in the past, in Q4 they signed on deals with automotive, energy, healthcare, insurance, mining, and shipping customers. They also held a demo day for the Foundry platform to help customers understand if Palantir could solve a problem for them. After demo day, they saw a clear uptick in the number of inbound inquiries about their software, so they're going to host a second demo day in April of 2021. So what's next for Palantir? Well, clearly growth is a priority. The CEO emphasized on the earnings call that if you're a short-term investor, you should not be investing in this company because their focus is solely on long-term growth. He committed to at least 30% growth every year for the next 5 years, but he did not say that they would maintain their current growth rate of over 45%. Additionally, Palantir seems to be doing a good job of marketing their products, as evidenced by the uptick in the number of inbound inquiries that they've been receiving. And I think this, combined with their ability to automate the deployment of their software even more, is going to be a huge driver of growth for the company in the future. One interesting anecdote that the chief operating officer mentioned on the call was that at one point Palantir was working with one of the cloud service providers, and they were told that that service provider did not have any more servers available for Palantir. They were growing too quickly. Now, I don't think this could have been one of the large service providers like AWS or Microsoft Azure, but it's still an interesting point that kind of underlies how quickly Palantir is growing. So what am I doing with the stock? So I definitely think that there is the potential here for Palantir to become an absolute behemoth of a company. But I also see the potential for many of the buzzwords that I heard during the earnings call, including automation, AI, and of course revenue as a lagging indicator, to be just that, buzzwords without any real substance. I think in large part it falls onto how much you trust the leadership of Palantir. I say that because at the end of the day, I don't fully understand the risks or opportunities that Palantir is going to face in the future. I usually like to have a list of all the different risks that could face a stock in the future, which would cause me to sell, as well as a list of the potential opportunities that would make me want to buy more of the company. But with Palantir, I can't really clearly say what those risks and opportunities would be. If someone out there has a better handle on this than me, please let me know in the comments. But what Palantir actually does and the value that they offer is not at all obvious to a non-data scientist like myself. So I end up falling back on the growth numbers to tell the story rather than the story that leadership is telling. On the call, the CEO emphasized emphasized that growth would be above 30% for at least 5 years. But because I'm relying on the growth numbers to tell the story, I really need those numbers to stay in the 40 to 50% range over that time. One of the analysts on the call asked Palantir's chief financial officer why revenue growth had slowed between Q3 and Q4 of this year. And I felt like the CFO kind of dodged the question and instead talked about the areas where their revenue growth had increased in the company. Because I don't know enough to really be able to dive into the backgrounds of this and figure out what the answer to that question is without relying on leadership to tell me, it really presents a risk as an investment. All these things together just paint a very ambivalent picture of the company. So here's my current takeaway, which I am absolutely open to changing if I'm presented with new, better information. Palantir is growing well, but not as well as the CEO is hyping them up. That could just be because they're going to accelerate revenue growth in the future, so we haven't seen that yet, but I am not confident enough to bet on that. So my strategy is to not invest at this time, but to wait and see how they perform over the next few quarters before making another decision. If they do start to accelerate revenue, then sure, I'll jump on. Yes, this is going to cause me to miss out on some of the gains that I could have had, but at the same time, I'll also avoid a lot of potential downside if a lot of the stock story turns out to be hype without any real substance. But let me know in the comments what you think of Palantir. Don't forget to like and subscribe if you enjoyed this video, and I'll see you next time.